Welcome to Apex Formula, where strategy meets action.
In the next 5 years, AI, automation, and global instability will fundamentally rewrite the rules of wealth. If your income relies on a single source, you're not building wealth, you're building a risk profile. Today, we reveal the 5 non-negotiable rules for creating an income stream that is not just passive, but future-proof, a system designed to thrive in any economic environment. The average person views income as a transaction, time for money. However, Apex minds view income as a fortress of multiple reinforcing streams. True prosperity in the age of rapid change requires a higher level of strategy, a system designed to absorb shock and capitalize on disruption. These 5 rules transcend market cycles and conventional wisdom. Let's begin. Rule 1. The principle of multi-dimensional income. The first rule is mandatory. Diversification is no longer optional. It is a mandatory defense mechanism. You must actively cultivate income from at least 3 different dimensions: active, passive, and portfolio. Active income is your primary job, but strategic future-proofing means ensuring this job is at the high-leverage edge of your industry. Passive income is where most fail. It's not truly passive initially. It requires upfront strategic investment. This could be an AI automation venture, a scalable digital product, or fractional real estate. Portfolio income must be structured for cash flow. Look beyond basic growth stocks and identify assets designed to pay dividends, royalties, or rental income, providing crucial liquidity during downturns. The ideal mix requires a risk-weighted allocation. High-risk, high-growth assets should be funded by stable active income, and they must always remain a smaller percentage of your total inflow. The strategic purpose of this rule is redundancy. If one stream fails, due to a layoff or a market crash, the other 2 streams maintain the structural integrity of your financial fortress. Rule 2. Dynamic skill acquisition and leverage. Your single most valuable future-proof asset is your ability to learn and apply high-demand skills. We covered the skill depreciation curve, the speed at which a high-value skill becomes commoditized by technology. Your competitive edge is measured by the speed of your personal learning loop. To combat this, focus on skill clusters that AI finds difficult to replicate: complex systems thinking, interdisciplinary synthesis, and emotional leverage. The 5-hour rule adaptation. Adapt the 5-hour rule. Dedicate 5 hours per week not just to consumption, but to practical synthesis. Example: don't just read about AI ethics. Use that knowledge to create a unique consulting framework, synthesis, that you can sell as a product. Leverage. The new skill must immediately fuel a new income stream. Rule 3. Optimize your tax architecture. For the high performer, maximizing cash flow isn't about earning more, it's about keeping more. Tax optimization is a legal, risk-free investment strategy. The goal is to move income from the actively taxed sphere into the portfolio-protected sphere. The sophisticated investor uses the tax code as a defensive mechanism. Maximize tax-advantaged vehicles like Roth or self-directed IRAs. If your income allows, utilize specific business entity structures like LLCs or S-Corp to shift personal expenses into deductible business expenses, effectively lowering your taxable income base. This requires consistent consultation with a tax professional, but the net result, a reduction in your tax burden, is one of the highest guaranteed returns you will ever achieve. Rule 4. Implement systemic automation. You cannot future-proof your income if the management of that income is reliant on your daily, inconsistent attention. Systemic automation focuses on forcing 2 key behaviors: automated savings, and automated debt repayment. Implement the Pay Yourself First doctrine digitally. The moment your paycheck lands, automatically transfer 20 to 25% to your investment accounts, emergency fund, and savings goals. This eliminates the psychological barrier of having to decide to save. Simultaneously, automate your high-interest debt payments, ensuring you pay more than the required minimum. High-interest debt is a perpetual leak. Rule 4 seals the leak through systemic force. Rule 5. Invest in deflationary assets. The final rule protects your buying power against currency devaluation and central bank policy. As we covered in our futuristic technologies niche, inflation erodes currency value. Deflationary assets are those designed to become scarcer or more valuable over time, counteracting the printing of money. Asset clusters. Cluster 1. Digital scarcity. This includes assets with hard-capped supply, such as specific cryptocurrencies like Bitcoin. They are resistant to central authority intervention. Cluster 2. Real assets and IP. Highly appreciating land in strategic locations, or intellectual property, IP, that generates royalties, like licensing your digital products. These retain intrinsic value regardless of currency fluctuation. Your portfolio needs a specific allocation to these assets that cannot be printed into oblivion, a crucial hedge against the future. Future-proofing your income is not about luck. It's about strategic design. It requires adopting a mindset that views wealth not as a jackpot, but as a system you build, protect, and continually optimize. These 5 rules, from multi-stream income to systemic automation, form the strategic formula for the Apex Mind. If you found value in this strategic blueprint, we recommend you to master the systems covered in productivity and mindset niche of our channel. Wait! Before you exit this framework, we must reveal the single most important principle that separates surviving from thriving. Bonus Rule 6. The principle of anti-fragility. The 5 rules we covered are your foundational defense system, but true future-proofing requires moving beyond mere survival. The final hidden rule for the apex performer is the principle of anti-fragility. Most people aim for robustness, a system that can withstand shock. But an anti-fragile system is one that benefits from disorder, volatility, and stress. Think of it not as building a shield, but as building a biological system that gets stronger when challenged. Implementation, deep dive, optionality, and stress testing. To integrate anti-fragility into your income structure, you must build optionality and embrace stress testing. Optionality. This means having numerous small, low-risk opportunities, options, available where the cost of entry is small, but the potential payoff is unlimited, asymmetric risk. Example: spending 10 hours and $100 to launch a simple digital template, low cost, fixed downside, versus taking a massive $100,000 loan to open a physical business, high cost, massive fixed downside. The anti-fragile mind chooses the route with unlimited upside potential and minimal damage if it fails. Stress testing. Actively expose your income streams to small, manageable volatility. If your passive income stream relies on a single platform, migrate 10% of your operation to a competitor platform now. Don't wait for the primary platform to collapse. This deliberate exposure to stress strengthens the overall system. Your financial life should be a collection of low-cost options that benefit from chaos, funded by a robust, automated core. This is the strategic difference between surviving the future and profiting from it. The anti-fragile mindset shift. The Apex formula is not just a set of financial rules. It is a declaration of independence from fragility. Up to this point, we've talked about systems, income streams, automation, and strategy. But the real shift happens here. The moment you stop seeing risk as something to be avoided and start seeing it as raw material. Every disruption, every failed automation, every income stream that underperforms is not a setback. It is feedback, data, signal, something that makes the system stronger if you know how to listen to it. This is where most people fall back into defense mode. The apex mind does the opposite. It audits weekly. It strengthens weak points deliberately. It allocates time to skill redundancy. It treats tax optimization and automation not as annual tasks, but as ongoing structural maintenance. When you build income this way, you are no longer reacting to the economy. You are operating above it. Volatility stops being a threat and starts becoming fuel. Chaos becomes an advantage. The future does not belong to the most resilient. It belongs to those who are structurally positioned to benefit from shock. Stop playing defense. Start designing a system that gets stronger every time the world shakes.
Subscribe to Apex Formula for the next step in optimizing your life and unlock the mindset, systems, and strategies that turn potential into real, measurable progress. Stay focused, stay evolving, and we'll see you in the next video.